Hey guys, it's Matt. Today we're going to talk about whether we are good in predicting. So let's talk for a minute what's going on right now in the stock market. Basically, we erased all the gains that we had since Trump came to power. And again, not being political or anything like that, I'm just referencing it as a time period. And I would say that this gives us a lot of perspective about trading. Trading is not just about the day-to-day and what's going on, but the risk of the one-off, right? So everything you have that you're trying to do, if you're trying to develop discipline in this business, is deciding how you should trade, not just on a day-to-day, because that will be a habit that you develop, because the way you trade day-to-day will basically affect you how you will trade on the days that the market is completely off, on the off event, on the 1% event, or 0.1% event that could happen. So you develop all this discipline in trading in order to deal with the hardest situations out there. So in the beginning of this video, I've asked you if we're good in predicting. Let me tell you this, we suck at predicting. We suck at it. And this is not just applies to humans, that applies to just about everybody out there, because everybody works with models that are based on past performance, what the market has done in the past, how diseases acted in the past, how we were able to contain things in the past. And then we're hit with a new reality, and then we don't know what to do, and we scramble with it. As I mentioned many times, the only thing you can do is trade reasonable size. People don't do it anymore, unfortunately. We want the lowest day trading margins so we can max out the rewards. But unfortunately, this kind of behavior on days like this it's not very good, right? So what you build in 3-4 years of a habit, and trading in what would be normal, maybe you got away with over leveraging, you didn't get away with it during such tough periods. So again, we're not good in predicting. If I told you a month ago that we would erase 4 years or 3.5 years or 3 years, whatever the case is, of gains within 30 days, I would probably be looked upon as a clown. But the reality is that anything can happen. Could this market go down 40%? Sure. Can it go down 50%? Sure. 60%? Sure. 70%? Sure. 80%? Sure. Now, some of you probably said somewhere along the way, no way it will go below that, because it's in our nature to try and predict where the bottom is. I don't blame you for trying to predict it, but don't trade on your predictions, because we suck at predictions, right? You have to trade what the market tells you. And the worse it gets, right? So use your discipline or use your observational skills to see what's going on in the market. So this kind of a rough period gives you an idea that you should be really be cautious in the future. So that's on one thing, that's the one thing I wanted to talk about, that we got into a situation that nobody thought we would. The second thing that I wanted to tell you is that be an intelligent trader. Now, over this weekend, the Fed lowered the rates by 1 percentage point. And we're almost at zero right now on the interest rates. And so they did it over the weekend and they panicked and everything else. Now, my question was to myself when it happened, and I heard the news, is why did they do it on the weekend, right? Was it a smart move? No, it wasn't. Not in my opinion, at least, because the market is closed, and during such panic times, it would look like a panic move, as opposed to maybe wait till Wednesday, or during an FOMC meeting, and then announce it then. Announce it something that that the market anticipated anyway. So that was, in my opinion, not very intelligent. So what does it tell you? It tells you that you as an individual trader could make intelligent decisions. Don't always look for higher power, because we all look at, we're trying to get inspirations from, institutional traders and gurus on the internet and all this nonsense that people follow on Instagram, or people say that they're traders, but they're really just paper traders, or any of that sort of thing. You have to be a responsible trader. you can make individual and rational decisions that are better than a lot of people out there. And this is what I encourage you to do, to be a smart decision maker. There were some people out there that before this whole thing unraveled, before the coronavirus unraveled and had its devastating effects on the markets, and it is devastating because I feel bad for the people with 401k programs, IRA, worldwide. People have other retirement programs, such as Australians could have superannuations and Canadians have something called RSPs. It affects everybody because everybody is tied up to the market. So you could be a good decision maker and you could basically make decisions based on risk and everything else, and not be like a Fed and panic last minute and do something that devastates your portfolio, right? So you want to be prepared for every scenario. You got to stay calm and make those decisions in an intelligent way, and that's what I encourage you to stay within, to trust yourself to make those intelligent decisions, and don't always look out there, go on forums and Twitter and other blogs and to see what they say. If you have a position that is not going in your favor, just cut it out. Don't be afraid to be. We're always afraid to be the guys that when we pull out, all of a sudden the market will reverse. In times like this, if anybody tried to catch the bottom, they failed. If you kept on going long and long and long, or if you tried to play volatility, such as options, which is extremely risky, try to sell premium, you would have lost every single day. Every single day. Whether you had puts or calls, the market went up, the market went down, even puts and calls that were options that were out of the money were, because of the CME margin rates that have just gone, I think, from somewhere around 7,000 to something like 12,000. So we had more than 50% increase. It just tells you about the risk that was out there and how it affected traders. So again, I'm not here to push the futures industry. I'm here and talking to those that are in the futures industry, that are trading their accounts. Hopefully you're using your risk capital. This is all you should use in this business. And remember that past performance is not indicative of future results. When you build a model, that has worked on a demo, if you went through a software demo, remember, don't anticipate the same results when you go live, and definitely don't trade with the same size. Give it some time, develop it. So I have nothing but the best of intentions for you, to be successful at it. But again, I'm sharing all those things with you about the risk side of the business, because I think if you take care of the risk side, potentially, I should say, be very careful, you might become a good trader one day. So again, just as a disclaimer, there's a substantial risk of loss in futures trading. Past performance is not indicative of future results. I thank you very much for watching this. Please click the like button. We'd like to have your thoughts as well. Sometimes I read, when I have time, the comments, and basically it gives me inspiration as to what people are saying, gives me ideas for new content, and at the same time, just to see how people handle it out there. And I wish you and your families nothing but the best of health. I know those are difficult times, but we'll get through this. We'll come out stronger on the other side. Thank you again from Optimus Futures and the team here, and go to our site if you want to open an account, www.optimusfutures.com, or just call us if you have any questions. We'd love to earn your business. It's 1-800-771-6748. Thank you. Bye-bye.